All right, guys, Paul Singh here with bullsonwallstreet.com. Today, we're going to talk about how to trade around analyst downgrades, both when you're caught in a position and how to aggressively trade them when you're just looking for a trade. So we're going to look at NVIDIA and Tesla today. Let's start with NVIDIA, NVDA. You can see here, this stock gapped down big. And for this one here, we're going to talk about how to actually enter a trade based around a downgrade. So NVIDIA was downgraded here on the date here is the 23rd, February 23rd. You can see big move down just based on the downgrade. And that's one of the things I do. I look to see when it's downgraded, is there any other news? Is there something significant beside this one analyst or bank's downgrade? And with NVIDIA, it was basically just this one downgrade. That's the one where we tend to see overreactions and the stock will often bounce back. So we look for the downgrade and then we look for some type of reversal signal telling us that we're going to get some kind of bounce, that it was an overreaction. Now, we did not get that the first day. Sometimes these things will bounce right away. This one happened on the second day. The stock was already a little extended. We got a big move down, and then we got this complete reversal here. The formal name in this candle pattern is a piercing pattern, where it looks like it's going to fail, and then it pierces into the previous candle. That is your entry signal. So you could have entered here at 101, and you can see it bounced nicely all the way up to about 105, and it did get to 105 earlier today. Now, the question here is this going to continue back up in the trend it was in, or is this a dead cat bounce? So the first thing we're going to do is think of it as an aggressive trade, because oftentimes we get these bounces, then when it hits a resistance level, it'll continue down. So what you can do here is take a partial profit, then see if it leads to a bigger move. Sometimes they completely reverse and resume that original uptrend. So it's an aggressive trade, but you want to leave yourself open to a bigger move. And then that's the one where we're going to enter right away. And then we're going to also talk about, because I'm currently caught in this position, when you're in a position and you get an analyst downgrade against you. So I did that with Tesla here. I was playing a reversal off this candle right here. A lot of stocks on this day late last week, this was Thursday, put in these reversal candles and ended up bouncing. Unfortunately, Tesla here had an analyst downgrade, which caused it to bounce. Now, I decided to stick with this position, even though it went past my stop level. My stop level here was 248, but I knew there was this 50-day moving average that it could potentially bounce from, and sometimes you get overreactions to these downgrades, and then it'll resume its uptrend. We'll wait and see how this plays out. Next week, I'll put out another post. We'll update on how this trade ended up going, but at this point, I am back up above my stop level. My entry here was at 257. My target here is at the top of the range, maybe even a breakout here. We were looking at initially at even a move to 300. So still very low risk, high reward trade. Now, if this does reverse and go below the moving average here, I'll have to get out. But at this point, it looks like the strategy is working. If it gets up back up here at 257, we get back to my entry position, and then I treat it as a normal trade, the way I did when I entered. So we are in this kind of gap down mode off the analyst downgrade. So Tesla, NVIDIA, two different ways. One, if you're caught in the trade, loosen your stop if your risk allows and see if the stock bounces back. If the risk gets too big, you're going to get out. With NVIDIA, that is the reversal play, a quick, aggressive swing trade that could potentially turn into a bigger trend. So two ways to play these analyst downgrades. Don't shy away from these. I know a lot of traders, they see an analyst downgrade and they want to stay away from the stocks, but sometimes you get these really big opportunities off overreactions.